Hello all, welcome back to our channel. So students, in this video we will discuss unit number 2, preparation of finance statements from accounting for management subject, theory explanation. Okay, so 8 marks, for 8 marks theory there is not at all having any chance. If in case they will ask one theory or one problematic, or else two questions problematic only they may ask in your final examination. Okay, my suggestion to you all is go with the problematic only instead of learning the theory. Basically why? Because for accounting subjects, for problematic subject, either any student at least minimum 3 problematic he or she need to attempt in part B. So my suggestion to you all is, problematic you are having only one method, that is final accounts. So in our channel I have already uploaded the problematic explanation video also. If you are unaware of that, please go and check out that, practice problem only ma. But in this video I will give you a quick glimpse of the theory explanation. Okay, so that if you are okay with the theory also, you can able to attempt it. The first important theory question from unit number 2 is differences between capital expenditure and revenue expenditure. Okay, so when you are attempting any differences between question, first you need to write the meaning of the specified words. They have asked capital expenditure and revenue expenditure, no? So before attempting the differences, you need to write the what is capital expenditure and what is revenue expenditure ma. Okay, so capital expenditure is nothing but improving the long term assets. For improving the long term assets, whatever the amount you are spending on it. For example, long term assets is nothing but machinery, land and buildings, furniture. These are all long term assets, no? When you are investing certain amount for improving your long term assets, that is called capital expenditure. Okay, for example, land, buildings, machinery, fixed furniture, motor car, investments, etc. Okay, then what is revenue expenditure is nothing but revenue expenditures is the amount spent for earning more income or revenue from business. So when you want to earn more income in your organization, the amount which you spent, that is called revenue expenditure. Okay, simple example I will take, like advertisement, advertising your product. It is an expense but it will generate you income only, no? Income is nothing but revenue expenditure. Okay, simple, two lines meaning you write it. Okay, now you write the difference between capital expenditure and revenue expenditure ma. Any time if you are attempting differences between question, compulsory you need to write this section number, compulsory you need to write this basis, capital expenditure, revenue expenditure. Okay, sometimes some students will write like this only capital and revenue. You should not do like that. Some students will write paragraph. You should not do like that. Okay, first is meaning. What is capital expenditure? The amount which you are spending for improving your long term assets is called capital expenditure. The amount which you are spending to earn more income in your business, that is called revenue expenditure. Okay, I hope that you have got this point. Next, nature. So capital expenditure is always a non-recurring. Okay, non-recurring is nothing but every month it will not come. Okay, so yearly once, yearly twice, like that it will come, this expenditure. But revenue expenditure is recurring. Like for example, every month you will get that amount. Like for example, rent will pay every month. Okay, that is recurring. Next, you are having purpose. Capital expenditure enhance the earning capacity of the firm. It will improve the earning capacity of the business. It will maintain the earning capacity of the business. Means, for example, right now you are having 100 rupees profit. It will try to improve it to the 200. This is called capital expenditure. What is revenue expenditure? If you are gaining 200 profit, it will maintain that 200 profit every month. That is called revenue expenditure. Accounting treatment is nothing but it will always shows in the liability side. Revenue expenditure always show in the debit side of P&L account. Okay, next, effect on income. Capital expenditure, whatever you are having, it will does not affect any income, but it will reduce the business income in certain period of time. Okay, examples of capital expenditure is patents, copyrights, goodwill, etc. Example of revenue expenditure is selling expenses, manufacturing expenses, interest on loans. This is the thing. Okay. Next important question is depreciation and concept of depreciation and its method. So what is depreciation in general? Depreciation is the amount which you are spending on fixed asset. For example, you have purchased a mobile which is worth 10,000 rupees. You have used it 1 year. 1 year you have used it. After that, suddenly your phone was getting some stuck over there, and you have given your phone for service, which is costing 1,000 rupees for your service. The 1,000 rupees whatever you are spending on your product, it is called, the 1,000 rupees is called depreciation. The amount of cost, the amount of expenses whatever we are giving it to the fixed asset, that is called depreciation. How many depreciation methods you are having? 2 depreciation methods we are having. Straight line method, diminishing method. Straight line method is nothing but fixed installation method. Means, for example, in first year if you are having 1,000 rupees depreciation, in every year you will have 1,000 only. Okay. But coming back to the diminishing method, every year it will change based on the product value. For example, first year your machinery value is 10,000. 10% depreciation is 1,000 rupees. Second year your machine value is 9,000. So 9,000 for depreciation is 900 only, not 1,000. Okay. So this is the thing about the depreciation. Not much important, but I am saying it briefly. Okay. Next important thing you are having, preparation and presentation of financial accounting and financial statement or final accounts. Okay. So in final accounts, how many accounts we will prepare, ma? 3 accounts we will prepare. Trading account, profit and loss account, balance sheet statement. In trading account, whatever the incomes and expenses which are related to the manufacturing, which are related to the factory related things, if you are having, that is called trading account. Trading account, you will have the incomes and expenses related to the factory. Factory type expenses should be debit side of trading account. Factory income should be credit side of trading account. Coming back to the P&L account. P&L account is the thing which is having the income and expenditure related to the office. Office related incomes should be credit side of P&L account. Office related expenses should be debit side of P&L account. Balance sheet. Balance sheet is nothing but assets and liabilities. Future repayment of your loans, that is called liabilities. Assets are the properties of your organizations. Okay. Balance sheet is a statement, it is not an account. Okay. Basically, when you will attempt this answer means when you are perfect in long problematic, then only you will able to attempt this theory. Okay, there is nothing to explain in it. You need to mention some values whatever you are having in your things. Okay, so these 2 questions are most important for theory. That's it. There is not at all having any scope to get theory, but for students whoever is interested, for them it will be helpful. Okay, next you can learn this question also, ma. What is this question? Means, discuss the provisions related to maintenance of books of account as per Indian Companies Act. According to the Indian Companies Act, whatever the books are accounts we need to maintain, like that, this question is there. The first one is preparation of final accounts. Every company will prepare their final accounts at every end of the year. For every financial year, business will be prepare this final accounts to get to know the position of the business to survive or not. If your business is running in a loss position, you will not continue your business, no. So for that purpose. Okay, so this is also important question. Just give a quick revise of this question, not much important. Okay, so this is all about the theory questions of unit number 2. I hope that you have got clarity. If you're having any further doubts, let me know in the comment section. And all the very best for your examination and all the very best for your preparation. If you like this video, then do like, share, comment and subscribe to our channel and share with all your MBA friends and groups. See you all in next video. Bye bye everyone.